Hi, and welcome to the Stock Scores Market Minutes for May 22nd, 2017. This week's topic, be patient for the winners. Then I'll do my regular weekly market analysis, and finally, trade of the week at the end of the video. Be patient for the winners. Most traders do not let their winners win. Now, I have found that the overall performance potential of a strategy is really dependent on those big winners. They don't happen that often, but if you don't let those winners win, if you jump out of the strong stocks at the first sign of weakness, you won't be able to make the big gains that drive overall performance. It is so essential to let the winners win, to not let your human emotion, your fear of having a winner turn into a loser, sell those big winners early and not maximizing profitability. It's the big winners that make you profitable overall. Let's get into this week's analysis. We had resistance up here, a little bit of an attempt at a breakout. That failed, not a huge surprise. We didn't have a very long consolidation, which means this foundation was weak. And so the breakout failed. We had the gap down, and there's our 18-hour correction. Came right back. The long-term upward trend line, I'll show that in a minute on the weekly chart, was basically like that. So we bounced off of that long-term trend line. My expectation is the market rallies up to the highs again, somewhere up in here, and then we'll stall and we'll continue sideways until we can muster up the catalyst to break out long term. So there's that long-term resistance there. This is, of course, the weekly chart. The long-term upward trend line is like this, and the medium-term upward trend line was like this, and we bounced off of it almost exactly at that upward trend line. So still a healthy market, but in the last 3 months, we've been more or less sideways, not a lot of volatility. That's a more difficult environment to trade in. You have to be pretty patient and very selective in that environment. On the Russell 2000, we've been stuck in a sideways range for how many months? 1, 2, 3, 4, 5, 6 months. And so you probably know already the small caps have not been a very exciting place to be. Those low price stocks have not done great. There's select winners, but not a lot of them. A lot of that is because the biotech sector has been kind of soft. So we need a breakout to the upside or a breakdown to break out of this low volatility sideways range. Until that happens, I suggest some caution with the small caps. The Canadian market was kind of drifting lower, and then it took a little bit of a sharp move lower. And so that increase in volatility, a bit worrisome. It did come back quite quickly. So this is a somewhat negative chart. The longer term chart, we're kind of stuck in a sideways range. We've been there for 1, 2, 3, 5 or 6 months as well. The long-term upward trend line is just getting tested. We could probably argue that we're below that, but what is encouraging is that it managed to bounce off of that horizontal support and come back. So it's not a market in real trouble yet, but it does look worse than the US market. TSX Venture, not a lot of volatility in here. We're in this sideways range, and until we can break out of that, I wouldn't get too excited, but we're stuck in that range right now. And typically at this time of year, that's what's going to happen. All right, on treasuries, this is an important chart this week. We had a downward trend line that's been in place for some time, and we've broken that downward trend line from a little rising bottom. Keep in mind this is a weekly chart. So we've almost got a head and shoulders bottom building here, and this could be the start of a reversal of the bearish trend that treasuries have been in. Now remember, if this goes up, that means interest rates are going down. So this is probably good for the consumer. A little counterintuitive because most people think that the Fed is going to raise interest rates, and yet we're getting the bond market moving higher, perhaps an indication that the market doesn't expect the Fed to do as much as it had earlier. On the US dollar, we saw some pretty strong weakness there. It's not so much weakness in the US dollar as it is strength in the euro. The euro's been doing very well as the European economy is recovering, and we're still in this downward sloping channel. We're now at the bottom of the channel, so I do think that the US dollar may be bouncing up a little bit in the near term, but this is a bearish trend for the US dollar. Lots of support down in here. I don't see it getting really weak, but the downward trend that's been underway for 6 months should continue. On the gold chart, well, that weakness in the US dollar helps gold, helps oil. We'll see the oil chart in just a moment. But here is the gold chart there, and we've risen up to that downward trend line, bounced down off of it. Are we now going to take another stab at it, building a rising bottom, or is the break of this short-term upward trend going to hold? I don't have the answer for you. What you want to watch for is, do we break this to the downside? If so, we're going down here. Or do we break the downward trend line? That'll probably take a few more weeks at least. And if so, then we're going to move up into here. Right now, I lean toward the bearish side because the trend is down. And on the oil side, we've had a little bit of a recovery the last few days, but keep in mind that we are in a bearish trend. So we went to the bottom of that channel, right? We came down here. Now we're coming back up. We're probably going to get stuck there in the near term. The long-term picture, and again, if you look at this on a weekly time frame, we're stuck in this long-term, pretty narrow sideways range, and we're kind of bouncing around within that range, but there's not a lot of excitement in the oil market. Now that little, call it 12 or 18-hour correction that we had last week, well, that was the motivation for the VIX to spike. The VIX was a great trade on that day, and we'll talk about the trade of the week in just a moment, but it fizzles out very quickly. It was only a day trade because, as so often has been the case, fear does not seem to last long. It fizzles out quickly. So stocks made an attempt at a breakout, but confidence was not high enough, and the breakout failed. We had a one-day correction, but have bounced back well to now retest resistance. Gold and oil are benefiting from a weak US dollar and looking better than they were, but they're still below their resistance, making upside limited. And as I said, fear fizzled again. Now quickly, coming up in June, starting June 3rd, I'm going to be doing some live training to complement the online investor and active trader courses. So there's some live webinars. I do one Saturday, June 3rd for about 3 hours. And then we're going to do some investor sessions in the evenings for a week. And I'm going to be doing my live day trading. You want to watch me day trade live? I will be doing that all month in June. Anyone who purchases the investor or active trader courses before May 30th will get this live training for free. It's a $495 value, but no cost if you purchase the investor and active trader courses, first-time purchasers on the courses before May 30th. If you have any questions about that or links on how to register for those things, just email me. You can actually register on the Stocks Course website, but email me if you have any questions. I'm happy to answer those. All right, let's get into the trade of the week. And it is on fear. UVXY is one of the ETFs that goes up when the market goes down. I bought it on my intraday pullback day trade right there. It was on my list because it had shown some abnormal action. That's one of the key things I look for. But what was nice about this one is it was one of those big winners where it ran up to 11-to-1 risk reward before fizzling out the next day. But this is those big winners I talk about where you have to let the profit run to really benefit you at the end of the month. You get a few of these kind of trades a month, and that's where a lot of the profit can come. It would have been easy to jump out here or to jump out here on a little bit of weakness, but you missed out on a lot of upside by doing that. Well, that has been the Stock Scores Market Minutes for May 22nd, 2017. I hope you all have a great week in the market and trade.